Good morning, everyone. Have you ever wondered what the difference between a loan officer and a mortgage banker and a broker is, and why they seem to be interchangeable, but then they seem to be different also? Well, I thought I'd put together a quick 5-minute video describing that, and I realized that to provide any detail at all, it would take a lot longer than that, so I put together a 4-part series. So first, today we're going to talk about types of institutions, then types of lending, then licensing, and then on episode 4 we're going to talk about types of loan officers. Let me know if you think this is burying the lead. I may be overthinking it, but I might have wanted to put types of loan officers at the top. I just figured you'd have to understand where they came from to understand what the labels mean. So let me know what you think. Reply to the email or make a comment, I guess, in YouTube. I'm brand new to this. So let's begin with episode 1, types of institutions. All right, so all institutions, federal banks, national credit unions, mortgage bankers, and mortgage brokers are regulated by several different agencies, but one that regulates all of them is the CFPB. And the CFPB is the Consumer Financial Protection Bureau. I will attempt to leave a link in a pinned comment in the video, so if you have wanted to explore what the CFPB is, you can do that. I don't know, it seems like watching paint dry, but bottom line is CFPB was created in the Wall Street Reform Act of 2010. From loan officer pay to what qualifies as a qualified mortgage. All right, so federal banks. Federal banks are all covered by the Office of the Comptroller of Currency. If the bank chooses to participate in the offerings of the Federal Reserve, such as the Fed window, which is sort of a bank of banks, it becomes a member of the Fed, and it has regulations placed upon it by them. If it chooses to participate in the FDIC insurance scheme, I don't know why you would if the government's going to bail you out anyway, but they also have regulations put on them by the FDIC. All right, so that's federal banks. Then there's national credit unions. National credit unions are regulated by the National Credit Union Administration. That makes sense. If they're state chartered credit unions or banks, they will be regulated by the DFPI, the DBO, and if they're state level credit unions, they also have the option of going with the NCUA for whatever purposes they would want to do that. Not my department. All right, next we have mortgage banks. So any bank that has a large mortgage operation could be considered a mortgage bank. So Wells Fargo, Chase, Bank of America, these could all be considered mortgage banks. But for our purposes, we're going to discuss a mortgage bank as an entity that focuses solely on mortgage business and the satellite businesses thereof. Satellite business might be something like homeowners insurance. We offer signing services or escrow services, that kind of thing. So that's what we're going to discuss as a mortgage bank. In California, mortgage banks are regulated by the DFPI and the DBO. In most instances, when you're discussing mortgage banking, you're discussing a state-regulated institution with regard to mortgages. Again, Wells Fargo could be considered a mortgage bank, but they're not. The largest portion of their P&L that ever came from mortgages was 10%. That's could be a rough number, but it's something like that. Whereas a mortgage bank typically has 97% of their income or more coming from the mortgage operation side of things. Next, we have brokers. Brokers exist in every industry, and in the mortgage space, what they do is they find somebody who needs financing, and they match them up with a financial institution that will fulfill that need, and then they bring them together and consummate the transaction. That's what a broker does. In California, brokers are regulated by the DBO and the DFPI. All right, well, that wraps up episode 1. Again, I'm Mike Collier. You can text me any questions about this episode, or if you'd like more detail, text me or make a comment or reply to this email. My everything phone number is 650-288-8170, so feel free to use it. And next episode, we're going to be talking about types of lending. And so we're going to discuss broker, correspondent, retail, etc. So have a fantastic day, and I'll see you on episode 2.